Welcome, everyone. Thank you for joining us for today's event and happy Fair Housing Month. Fair Housing Month is a time to reflect on our progress and look forward to our new benchmarks. I'm looking forward to our conversations today. I'm David Dworkin, President and CEO of the National Housing Conference, and I'm thrilled to be hosting this first online event on behalf of the Black Homeownership Collaborative. Collaborative was launched almost a year ago with the goal of creating 3 million net new Black homeowners by 2030. Housers have been purposeful in their intentions to move racial equity forward in recent years, which is very encouraging, but actions speak louder than words, and we have a lot to do. We've been hard at work for the past year refining our strategies and developing ways to fulfill our commitment to this audacious goal. You'll be hearing a lot more about this work when we convene in Atlanta on the second Juneteenth holiday to recognize the first year of efforts and launch an exciting new consumer-oriented website that is under development as we speak. Federal agencies have also begun to address racial equity issues in new ways and take a hard look at their contribution to fair housing and fair lending, as demonstrated by last week's White House event on equity and by the recent PAVE report from HUD. Coming soon, a new Community Reinvestment Act rule, the equitable housing plans from FHFA, and more. We have an incredible lineup of speakers to discuss ways to increase fair access to credit. You will hear from representatives from the Bipartisan Policy Center, FHFA, or the Federal Housing Finance Agency, the Department of Housing and Urban Development, Freddie Mac, and more. And we are especially excited to have Michael Hsu, Acting Comptroller of the Currency, who will join us as well. Finally, we will have a Q&A session after our panel, moderated by Nikitra Bailey from the National Fair Housing Alliance. Please use the Q&A function in Zoom to submit questions. Brian Green from the National Association of Realtors will also be moderating Q&A for Acting Comptroller Hsu. I want to recognize both Nikitra Bailey and Brian Green from the National Association of Realtors for putting together this event. Well, Nikitra's with the National Fair Housing Alliance, and Brian from the National Association of Realtors. Your deep knowledge and commitment to fair housing is so important to our progress. So thank you both personally. With that, I'm honored to start our event by welcoming Wendy Penn, Associate Vice President of Affordable Housing Initiatives from the Mortgage Bankers Association. Wendy?
Great. Thank you so much, David. And thank you for the opportunity to be here. It is definitely an exciting time to be here during Fair Housing Month and to talk to you about some of the work that we're doing at the Mortgage Bankers Association related to increasing minority home ownership. We certainly value our participation in the Black Homeownership Collaborative and look forward to continuing to do great things with that group. So today I'm going to talk to you about Convergence, which is a place-based initiative that we launched a couple of years ago. And if we go to the next slide, you'll see that Convergence is a collective impact initiative designed to increase African-American home ownership and close the racial wealth gap. And we picked the name Convergence because it symbolizes the fact that we have so many groups coming together to work on a particular issue. And the strength of Convergence is that we leverage the strength of local stakeholders such as lenders, real estate professionals, housing counselors, nonprofit developers, local government, and others, along with the resources of national partners to really address these issues together. And we know we often see collaborations. That is what it really takes to move the needle on some of these issues because no one organization can do it alone. And what I think is really unique about Convergence, again, is that it is really locally based. We look at the issues there specifically and use those resources, but having the support from the national level with some of our partners that I'll get into in a little bit is something that I think is unique and really adds to the strength of it. And if we go to the next slide, you'll see that at the heart of convergence, we found that there are 4 areas that we wanted to focus on based on some research that we did here at MBA. We realized that there are 4 gaps that we really need to work on if we want to close this racial wealth gap and this Black homeownership gap. And they relate to gaps in information, trust, markets, and resources. The information gap looks at the incorrect or just lack of information that's often in communities of color related to being a homeowner and the buying process. And that's often because we're dealing maybe with first generation buyers. We have families who have always rented and they're just not familiar with the buying process. Or maybe they've heard information that isn't correct. You know, the persistent narrative out there related to needing 20% down or having to have pristine credit and be able to get a mortgage. The trust gap, the fact that we're here recognizing Fair Housing Month, I think speaks to the trust gap. There have been the things in the past related to discriminatory practices like redlining, zoning that was really intended to create segregation. And just practices in the lending industry and in the real estate industries that kept people out of home ownership. And even more recently, things like the foreclosure crisis that really hit communities of color really hard. People saw their friends and families lose their home. And that's pretty frightening. And so it really intimidates people sometimes. They don't trust the process, they don't trust the people, and they don't want to have that same negative experience. Looking at the market gaps, there's a housing supply issue. We recognize that. And so what we're looking at through convergence is ways to not only build new construction, new affordable homes, but also look at ways to rehab existing properties and make sure that we're preserving affordable housing stock. And then looking at the resource gaps, well, that speaks to the financial assistance programs, down payment resources, things like special purpose credit programs that really provide the funding that people need to be able to get into a home. So those are, in each convergence location, those are the 4 things that we look at. And if we go to the next slide, you'll see again, just a little more detail about the types of partners that are involved in convergence. As I mentioned, it is locally based, and you'll see the types of local partners there, but also from a national level. There are trade groups that are involved, members of the research community, which is really good. And then the GSEs, we have partnerships with Fannie and Freddie, and they're also involved in these initiatives. The recognition is no one group can do it alone. I mean, and even just looking at the Black Homeownership Collaborative, that says it there. No one organization, no one industry can address these issues on its own. And that really at the heart of convergence is what we're looking at. For example, nonprofits at the local level, they often have great information, they have classes and other resources, but sometimes they don't have the marketing budget or the ability to do the outreach they need to really get people in the door and to utilize those offerings. Or maybe lenders have programs and products that would really benefit people, but they need to work on repairing or building trust in communities. So when these groups come together, you'll see that it creates synergy and they can leverage each other's relationships within the community. They can partner together, share some of the efforts related to marketing and outreach, and really make more of an impact than they would be able to do on their own. And as we look to the next slide, again, I just want to reiterate that the gaps that we're looking at, particularly as it relates to information and trust, we really want to be mindful of not only the messages that we're sending out, making sure we're providing accurate and up-to-date information about the process, but be mindful of who's delivering the messages. We want to make sure that we are working with respected, trusted individuals in the community. We want to make sure that if we're trying to reach buyers of color, that the messages are coming from people who look like them, who they can relate to. That helps establish trust and makes people more receptive to the information. Because we find that sometimes people will self-select out of the process just based on hearing a message or getting the information from someone who they might not believe has their best interest at heart. So we want to make sure that we are working through this process, having culturally competent messages, that we're leveraging the resources and expertise of our partners, and then really building those relationships within the community so that our partners can get the products and resources out to the people who need them to get them into homes. And as we look at the next slide, I want to focus on, again, we're talking about building minority homeownership, specifically Black homeownership. And even though obviously affordability is a key factor, convergence, these place-based initiatives are not an affordable homeownership program. We're not just looking at borrowers who might be LMI borrowers. We recognize that there is the full spectrum of buyers out there. There might be people who are mortgage ready. Maybe they have the credit score that they need, and maybe they're able to take on a mortgage right now, but they've self-selected out because they don't trust the process or they don't have the right information. And then there might be folks out there who are almost there. They just need a little bit of help. Maybe they need some counseling. Maybe they need to clean up a few things on their credit, or find a program that'll offer them some down payment assistance, or find a lender who might be using a special purpose credit program to help them get into a mortgage. And then also long-term, these initiatives are something that are ongoing. It's not just something we're not going to stand up a program for a couple of months and then leave. We know for there to be lasting impact, we need to be creating programs and collaborations that are self-sustaining and that can be there with those buyers who are coming in right now, and they might not be ready for another year or more because they do have some work to do to get themselves to a point that they can obtain a mortgage and then do all the work, do what they need to do to be able to stay in their home. Because, you know, we want sustainability. That's the only way we're going to help to build wealth. We don't want to just put people in homes and then find out a few months from now or a year from now that they're not able to continue those obligations. Again, just to reiterate the mission there, that what we're trying to accomplish is to increase minority home ownership and help close that racial wealth gap. And as you'll see there, you know, we've talked a little bit about people who opt out. We want to make sure we're addressing those people, people who are self-selecting and saying, this isn't for me, helping to educate them, understand what their concerns are. We are doing focus groups in the cities that we're working in to really understand what some of those challenges are, and to make sure that what we are producing to address that really fits those concerns and meets those needs. We're looking to help people who might be qualified take that first step, again, to make sure they understand what the opportunities are for them, what the benefits of home ownership are. We had a virtual home buyer fair recently in one of our cities. And it was surprising to see that the number of people on there who were like, you know, I feel less intimidated now. I better understand the process and I'm ready to take the first step. And all of these things combined together, you know, our goal is that we will increase Black home ownership. We'll build more stable and financially secure communities. And then in the long term, we will help these communities establish the wealth that they're trying to achieve. So I've shared a little bit about convergence in general, and I just want to touch, if we go to the next slide, about where we are right now. We have initiatives right now in Memphis, Tennessee, and Columbus, Ohio. Memphis was the first location that we launched, and we launched in March of 2020, just before things shut down all over the place. But we did that in partnership with the Tennessee Housing Development Agency. They are a partner there. And what you'll see there on the screen, I mentioned the types of organizations there, but I think the slide really demonstrates how broad this collaborative reaches. We have over 50 organizations represented and over 120 individuals. And you'll see there, the way the work gets done is these individuals are broken out into work streams. So based on those 4 gaps that we're trying to close, we have established work groups that really focus in on what do we need to do to address this. And that could be anything from looking very broadly at a systems change that might need to happen, or something more tactical like the consumer outreach, the consumer facing events that I sort of just mentioned. But the way that these collaboratives work is that these individuals, they're volunteers, but they take the skills, the know-how from their organizations, come together, they have regular meetings, and really drill down on these topics and create resources and products. One thing that I'll mention that's really exciting about Memphis, just a few months ago, it was established as a 501c3. So as I mentioned, these are long-term initiatives that we're trying to launch here. It's not just something that's around for a few months. So now Memphis operates as a 501c3. They have the ability to do fundraising. They have the sustainability that they're going to need to be around for a long time to really make an impact in that community. And as we look at the next slide, we get a little information about our initiative in Columbus. The Columbus initiative was launched in July 2021, which I think is on the next slide, in partnership with the Ohio Housing Finance Agency. and the Ohio State University. It's similar in structure. We have about 50 organizations represented and a little over 120 individuals represented. I'm sorry, I'm still seeing the Memphis slide. I don't know if it's changed. Yep, there you go, thank you. So I just wanted to point out that it's structured in a similar way, as you'll see how the work streams work, but they're a little bit different, which I think is important to stress. We are trying to solve the same issues, but every location is a little bit different. So what's nice about Convergence is we really lean on the resources that are there, the organizations that are there, and their strengths. And we organize the work streams around the issues that need to be solved and the people who are there who are able to do the work. But again, this shows you a great example of the variety of partners that are involved. And one thing that I'll mention here, just as I noted that Memphis is now a 501c3, we are in the process of finding what we call a host organization for Convergence Columbus. And what that means is there's a nonprofit in the community that we're talking to that we think would be a good place for Convergence to live, so to speak. And they'll operate very similar to the Memphis structure. But the goal is, again, for this to be something that's long-term and sustainable. And this particular nonprofit that we are talking to has an incredible reputation in the in the community, and is already doing the kind of work that we are trying to sustain. So again, we want to create opportunities that we can launch these initiatives and then have the ability for them to be self-sustaining. Which leads me to the next slide that talks about where do we go from here? We are looking to launch a third location by the end of this year, with the goal of being each time we launch a location, MBA and a lot of our partners, we support it for a year or two and then try to create an exit ramp, if you will, whether that's creating a 501c3 or finding a host organization in that community that can be the support for the long term. Again, because the goal is to create sustainable homeownership. Then what we're doing each time we launch a city, each time we have programs, we are learning from those locations, and we're developing a toolkit that will help us launch more locations in the future at a somewhat faster pace. Because again, we're learning each time we build one of these initiatives. And when we go to a new city, we'll have some of that structure in place, some of that framework ready so that we can hit the ground running and really make an impact. And what's great about that is the reality is we want to be able to share best practices. We're learning from each of these locations, because while we do intend to launch more of these Convergence place-based initiatives, we won't have the ability to have them in every city across the country. But by creating this toolkit that gives some instructions on how to set up this type of collaboration, and then being able to share the best practices from the cities where we are located, we will be able to give some guidance to other locations if they are interested in launching something. Because you might not be able to have a full place-based initiative, but there's a lot that you can do in the spirit of Convergence, in the spirit of collaboration that would be applicable in many different cities. And so, as I mentioned, this is an initiative through the Mortgage Bankers Association, but this is certainly not the only thing that we're doing. Convergence fits very nicely into our overarching Home for All pledge, which is a commitment we're asking our members to sign related to creating more homes in the minority community, and really taking a stand as it relates to fair lending practices. So this is more to come. And again, we'll continue our commitment to the Black Homeownership Collaborative. So be on the lookout for the next Convergence location. And I do have my contact information. On the next slide, if you have questions, you are free to reach out to me. So again, thank you for the opportunity to be here and to kick off this great event. And next, please welcome Dennis Shea, Executive Director of the J. Ronald Terwilliger Center for Housing Policy at the Bipartisan Policy Center. Thank you.
Well, thank you, Wendy, for that great presentation. And I want to express some thanks to the National Housing Conference and to your president, David Dworkin, and the entire NHC team for giving me this opportunity to tell you a little bit about the Terwilliger Center. The Terwilliger Center was launched last September. It's by Ron Terwilliger, a housing developer, multifamily housing developer, who's also a major housing philanthropist. And Ron decided to house the Terwilliger Center within the BPC because of the BPC's long track record of bipartisanship and housing policy work. As some of you may recall, back in 2011 to 2013, the BPC established a housing commission in the wake of the Great Recession, which tried to lay out a plan for a national housing policy that covered an array of topics, including homeownership, housing finance reform, rental housing. So the BPC's also had worked on senior housing and the deep connection between housing and health through a senior health and housing task force. And the BPC is currently working on, as part of the Terwilliger Center, something called the Housing Council work, which is focused on housing and racial equity. And we have benefited greatly from the Black Homeownership Collaborative plan. David had an opportunity to present the plan to our Housing Council. So we will be issuing recommendations, the Housing Council, later this year on how to close the yawning gap in homeownership and how to close some of these other racial disparities in housing that we see. Now, the Terwilliger Center, the mission of the Terwilliger Center is really quite simple. It's to support bipartisan policies that help promote and help ensure that every family in America has a safe, decent, and affordable home. It's as simple as that. We have a great group of advisory committee members, including two former HUD secretaries, Henry Cisneros and Sean Donovan, former Deputy HUD Secretary Pam Perry is also on our advisory committee. We have former members of Congress. So together we're trying to promote the idea that housing is truly a nonpartisan, bipartisan issue, and we're trying to get out there and promote bipartisan policies that make sure that everybody can live in a safe, decent, and affordable home. Obviously, we have an immense housing affordability challenge in the United States, and we see a large part of that problem being the fact that we have a tremendous shortage of affordable homes, both for rental and for sale. And we often cite a statistic in a report commissioned by the National Association of Realtors that we have underbuilt housing by 5.5 million, at least 5.5 million homes over the last 20 years. And this is a big part of the housing affordability challenge, the supply gap. So we're focusing on the supply shortage. We're currently conducting a series of webinars over the past 6 months that analyze various dimensions of the supply challenge, including land use and zoning restrictions, the complexity of housing subsidies, the latest innovations in construction and new technologies that offer the promise of reducing housing costs and construction timelines. On Thursday, we're having a webinar examining and highlighting corporate efforts to increase housing affordability. So we're going to continue these webinars. We've launched a 30-second video in a digital media campaign. This will be the first of a series of videos in a digital media campaign to highlight the housing supply shortage. And we'll be hosting a conference, which hopefully we'll be able to get to you information about it to you on June 23rd in Washington, DC, on the called the Summit on Housing Supply Solutions. So it'll be a one-day conference with some high-level folks attending to focus on the supply shortage. BPC also has a 501c3 political 501c3 that advocates before Congress and the administration. So we're not just about promoting policies or setting policies. We are also about advocating for those policies. And we're obviously keeping a close eye on Build Back Better, what happens with the legislation, particularly, of course, the housing provisions of that legislation. And we see there may be an opportunity to put together a standalone housing bill that enjoys bipartisan support. So that's something we're working on. So if you can go to the next slide, I'd appreciate it. When we launched the Housing Commission in September, we commissioned a poll by a company called Morning Consult to examine Americans' attitudes towards housing. And then we used a fairly large sample of 2,200 individuals who were surveyed. And we found that there was a strong support across the political spectrum on the fundamental value of housing. And if you can see here, 87% of those polled, including 82% of Republicans, agree that every child and family should have access to a safe, decent, and affordable home. 84%, including 83% of Republicans, agreed that zip codes or where you live should not determine success in life. Another 84%, including 79% of Republicans, expressed support for the idea that housing is foundational to other positive life outcomes, such as staying healthy and holding on to a job. And this surprised me, 74% of those surveyed, including 63% of Republicans, agreed with the proposition that housing is a human right. So in our view, this survey just validated our sense that the notion that the importance of housing, the foundational aspect of housing, was broadly shared across the political spectrum. Next slide, please. The Morning Consult survey also showed that many of the housing proposals under consideration in Build Back Better enjoy broad public support. For example, tax credits to develop low-income affordable rental homes, also known as the Low-Income Housing Tax Credit Program, garnered 69% support, including 55% among Republicans. Tax credits to develop and renovate homes in distressed communities, also known as the Neighborhood Homes Investment Act, which is a bipartisan bill in Congress. Again, 69% support, including 54% among Republicans. And funding for public housing repairs, once again, 69% support, including 57% support among Republicans. And there is broad-based and bipartisan support for initiatives to promote home ownership, such as first-time home buyer tax credit and down payment assistance for first-time home buyers. Now, admittedly, if you look at the the last two lines on this chart, you'll see funding for additional vouchers and incentives to local communities to remove zoning and land use restrictions that prevent new development. These garnered 50% and more support among all adults, but less support among independents and Republicans than among Democrats. So, but we feel both of those issues at the BPC do enjoy bipartisan support. There's legislation in Congress, for example, supported by Senator Todd Young of Indiana, a Republican senator, that would create a opportunity voucher program, which would provide funding and target vouchers for households with very young children to make sure they have the opportunity to move to a better neighborhood with better schools. We think that is a bipartisan issue. The issue of regulatory reform, of course, has a long pedigree in Republican circles, and Jack Kemp, the former HUD secretary, made it a signature element of his work as HUD secretary. So we feel strongly that even though these two issues didn't garner as much support in other than the other line items, we feel that there is strong bipartisan support across the board. Now, next slide, please. Again, so we are optimistic. We feel that, again, there are important initiatives on both the supply side and the demand side of the housing affordability challenge that can gain support from both Republicans and Democrats. And that is our mission at the Terwilliger Center. It's to elevate the issue of housing, the foundational nature of housing on the national agenda, and to put forward proposals and ideas that can get over the finish line in Congress and that can actually make a meaningful difference in the lives of Americans. So again, I want to appreciate this opportunity to say a few words about our work at the Terwilliger Center. And with that, I'll turn it over to Nikitra Bailey, who's the Senior Vice President of Public Policy at the National Fair Housing Alliance. Nikitra?
Thank you, Dennis, and good morning, everyone. We are excited about today's discussion as we celebrate Fair Housing Month and the 54th anniversary of the Fair Housing Act, legislation that was passed to honor the legacy of Dr. Martin Luther King Jr. for his efforts to create a just and equitable society, his great sacrifice to this nation, and his vehement commitment to fair and open housing. I will begin today by introducing the panelists. They will provide opening remarks, and then we will have a discussion. First up is Demetria McCain. Demetria is the Principal Deputy Assistant Secretary for Fair Housing and Equal Opportunity at the United States Department of Housing and Urban Development. Previously, McCain has led and overseen operations for housing mobility and advocacy programs for low-income renters, neighborhood groups of color, following 15 years of service. McCain joins HUD's efforts to eliminate housing discrimination, promote economic opportunity, and achieve diverse, inclusive communities. Next is James Wylie, Associate Director of Fair Lending at the Federal Housing Finance Agency. Prior to joining FHFA, James worked on fair housing and fair lending at the CFPB and HUD, serving to further fair housing and equal credit opportunities. As Associate Director, Wylie worked to ensure Fannie Mae, Freddie Mac, and the Federal Home Loan Banks provide fair, equitable, and non-discriminatory access to mortgage credit and housing. Next up is Pam Perry, Single Family Vice President of Equitable Housing at Freddie Mac. Pam oversees single-family strategic innovation to support the organization's mission to break through historical barriers to realizing a more equitable housing system. She focuses on increasing Freddie Mac's thought leadership and impact to eradicate disparities in homeownership and expand wealth for Black and Latino and American families. These are just brief bios. Their fuller bios are available on the website. We are delighted to have each of them. And at this time, I'm going to open it up and turn it over to Demetria McCain to deliver her opening remarks. Demetria?
Thank you so much, Nikitra. So happy to be here. Very, very happy to be here. If you indulge me, let me start with this. Not too many years ago, a recently new Black homeowner received a mysterious check in the mail. Now, for the homeowner, the check was a nice size. Enclosed with the check was a letter. And the letter was from the homeowner's recent lender. The homeowner just bought the home 3 years prior. And that letter was stating that the check was part of a settlement of a case brought by the Department of Justice in which the lender was a defendant, unknowingly. The allegation in the case was that the lender charged higher annual percentage rates to Black borrowers than non-Hispanic white borrowers. And in seeking to immediately resolve the matter, the lender entered into a settle agreement. Now, after having read the letter without haste, the homeowner endorsed the check and prepared it for deposit. That homeowner was me, a fair housing practitioner. You see, often housing discrimination is covert. Housing discrimination sometimes is overt. But in the end, no matter which type, housing discrimination harms. Now, I'm sure my friend Brian will let you know that according to the National Association of Realtors report, the U.S. home ownership rate climbed 65.5% in 2020, which was up 1.3% from 2019, and was the largest annual increase on record. Now, more Americans own homes now than during any year following the Great Recession. However, African Americans continue to face significant obstacles along the path to home ownership. The home ownership rate for African Americans at 43.4% trails behind that of a decade ago. Conversely, white Americans at 72.1%, Asian Americans at 61.7%, and Hispanic Americans at 51.1% all achieved decade-long highs in home ownership in 2020, with the rate for Hispanic Americans setting a record and reaching above 50% for the first time. So now let me just back up and tell you some of the activities we have taking place in my office. And as was mentioned by Nikitra, this marks the 54th anniversary of the Fair Housing Act's passage this very month. Yet access to wealth through home ownership remains persistently unequal. In his first week in office, President Biden issued a memorandum directing HUD to address discrimination in the housing market. Now, since that time, HUD published its proposed rule on countering housing practices with discriminatory effects, which we expect to be final in the coming months. So you can look for that from us. Now, with this rule, we will align federal enforcement practices with the Fair Housing Act's broad remedial purpose to end discrimination in housing. Now, let me turn to an alliance, you might say, with my friends over here at the Federal Housing Finance Agency. In August, HUD and FHFA entered into a first-of-its-kind collaborative agreement regarding fair housing and fair lending and trying to coordinate the two. Under this memorandum of understanding, our two agencies are focusing on enhancing their enforcement of the Fair Housing Act, which HUD is the primarily in charge of, and with administration with FHFA, who has oversight over Fannie and Freddie and the Federal Home Loan Banks. So our agencies have committed to a coordinated activity when possible and information sharing, which is really important to share data, and even doing so when we are acting independent of each other. So that's going to create a strong kind of unified stance as it relates to fair lending compliance by Fannie and Freddie, as well as the federal government. Now, this coordination can include coordinating examination activity or the agencies pursuing separate examinations and coordinating on conclusions, policy changes, as well as resulting in enforcement actions. That's a very important kind of partnership, you might say. And it was mentioned a little earlier, the issue of special purpose credit programs. And I know there are a lot of people on this call. Everybody might not be totally clear on what that is. So let me just say that HUD has joined with others in calling for tools to expand the access to credit and home ownership. Just this past December, on December 7th, that just passed, our office issued a policy statement that highlighted the department's position by way of our Office of General Counsel that actually stated that special purpose credit programs that are designed and implemented in compliance with ECOA and Regulation B generally are not barred by the Fair Housing Act. Now, we issued that guidance. HUD's guidance actually clarified the industry's uncertainty, and our hope is that it will make way for lenders to resolve these inequities and barriers in credit and home ownership that are faced by people of color and other underserved communities. Now, as many of you know, special purpose credit programs are designed to assist those who have historically been locked out of home ownership opportunities, such as the economically disadvantaged classes of persons, as well as first-time home buyers whose parents and grandparents have been excluded from the housing and credit markets because of what? Because of discriminatory policies. So this is a really critical tool. And while we at HUD are not regulators at all, and we have less of a connection with the lenders, I think the community, you might say, was very interested in making sure that it was clear that creation and usage of a special purpose credit program would not violate fair housing law. And so we made that statement clear and put that guidance out this past December. There also was reference earlier to PAVE. Again, everybody might not know what that is. So as a related matter, not specifically on credit per se, but certainly relating to home ownership, on June 1st of last year in Tulsa, President Biden announced that Secretary Fudge would lead a first of its kind interagency kind of convening initiative to address the inequities in home appraisals. Now, a 2018 Brookings study found that homes in majority Black neighborhoods are often valued at tens of thousands of dollars less than comparable homes in similar but majority white communities. And the crisis is actually worsening. Along with the domestic policy advisor, Susan Rice, Secretary Fudge from HUD launched the first interagency task force on property appraisal and valuation equity. That's where the name PAVE comes from. Now, this effort is utilizing the many levers of the federal government's disposal to kind of root out discrimination in the appraisal and home buying process. Our fair housing offices around the country are actually receiving an increased number of fair housing complaints regarding this particular issue. So right now, the Interagency Task Force just released its action plan a couple of weeks ago, and I invite all of you to visit pave.hud.gov to access the plan and see what the next steps are in addressing this big, huge problem. Now, very quickly, if I may, I'd like to mention some of the actions taken under this administration at HUD in other parts of the organization outside of my fair housing office where my team works. Lots of other things happening in other parts of our building to address home ownership and close that gap. So HUD's Federal Fair Housing Administration updated its policy on student loan monthly payment calculations in order to remove barriers and provide more access to affordable single-family FHA-insured mortgage financing for credit-worthy individuals with student loan debt, which has disproportionate impact on communities of color, as we all know. And we're also looking to provide support for our own HUD program participants. Recently, HUD announced over $1 million to 677 public housing authorities to support efforts to help residents who are living in public housing and those participating in the department's Housing Choice Voucher programs to actually meet their financial goals through HUD's Family Self-Sufficiency Program. The participants in the program have interest-bearing escrow accounts established for them. And upon successful graduation from the FSS program, the household then receives the escrow funds actually to advance their personal financial goals, which often include improving their credit score and making a down payment on a home. And just 3 months ago, actually, January 3 months ago, HUD awarded $51 million in housing counseling grants to 177 HUD-approved housing counseling agencies and intermediary agencies. Now, this included funding to HUD-approved housing counseling agencies that are partnering with HBCUs, HSIs, and other minority-serving institutions. This funding will support housing counseling agencies in their work to actually help families make more informed housing choices. And importantly, in fiscal year 2022, HUD budget includes $100 million set aside for Secretary Fudge's new initiative called First Home Homebuyer Assistance. Now, this is going to provide funds to states and unincorporated territories of the U.S. to support sustainable home ownership. And very quickly, I'll finish up soon, on the issue of sustaining home ownership, because it's one thing to get a home, but then it's another thing to sustain home ownership. Just yesterday, HUD announced through an FHA mortgagee letter that it is adding a new 40-year mortgage modification option for mortgage servicers to use in conjunction with its partial claim option to assist additional borrowers who are behind in their mortgage payments for FHA Title II forward mortgages. Now, this new loss mitigation home retention option is designed to help those borrowers who cannot achieve a minimum target of 25% reduction in the principal and interest portion of their mortgage payment through FHA's existing 30-year mortgage modification with a partial claim. We've also made other efforts to ensure payment reduction and recovery through pandemic-related policy changes made at both FHA and Ginnie Mae to promote sustainable home ownership. Now, with all of that, I'm going to close and I'm going to welcome our next speaker. So please know that at FHEO, fair housing is more than just words. And I'm going to welcome now James Wylie, Associate Director of Fair Lending at the Federal Housing Finance Agency. James?
Can people hear me now?
Yes.
My apologies. Thank you so much, Demetria, for that kind introduction, and good morning, everyone. I'm very pleased today to have the opportunity to share with you some of the things that the Federal Housing Finance Agency is doing to increase access to credit in communities of color. For those of you who may not be familiar with us, FHFA is the regulator of Fannie Mae, Freddie Mac, and the 11 federal home loan banks across the country. FHFA is also the conservator for Fannie Mae and Freddie Mac. Together, the institutions we regulate provide more than $7 trillion in funding for the US mortgage markets and for financial institutions. So while we're a relatively small agency, we know we have a big job. And we know that our regulated entities have a tremendous impact on access to equitable, sustainable, and affordable housing for everyone, including communities of color. So we take our responsibility to regulate them very seriously. One of our strategic goals as an agency is to advance equity in housing finance and foster markets that promote equitable access to affordable and sustainable housing. So how are we doing that? Well, step one in ensuring equity is addressing discrimination. So I'll start with fair lending. Last July, we issued a policy statement on fair lending that highlighted our agency's commitment to fulfilling our obligations as a federal regulator to enforce fair lending laws. We are committed to ensuring fair lending compliance by our regulated entities, and we do not tolerate discrimination. In August of last year, we signed a historic memorandum of understanding with HUD that Demetria mentioned, and we are proud to stand with HUD in making fair housing and fair lending a reality throughout the entire housing finance system. In August of last year, we signed last year in June, FHFA fulfilled a statutory provision for the first time, which allows FHFA to refer lenders that may be engaging in pricing discrimination based on race or ethnicity to their regulator for potential action. This is just one of the types of collaboration that Demetria mentioned, where we can partner, and when the federal government works together, we can make sure we improve outcomes for everyone. FHFA has built a comprehensive data set and process for analyzing pricing data, and now we will make these referrals on an annual basis to our partner regulators like HUD. No one should be charged more for a mortgage loan because of their race, their ethnicity, what country they come from, or the color of their skin. FHFA also issued comprehensive fair lending examination guidance for Fannie and Freddie in December of last year. That guidance is a comprehensive statement of how we apply fair lending laws to Fannie and Freddie and our expectations of them when it comes to fair lending. Apart from just the nuts and bolts of making sure that they comply with the fair housing laws in their entire operations, from purchasing the loan through servicing, their oversight of counterparties to property disposition, the exam bulletin also makes clear that fair lending is not just an expectation of the compliance department or the legal department, but the whole organization. Our exam guidance says that an effective fair lending program requires support from senior management, the board, and all business areas. We think this should be standard for the whole industry. Everyone is responsible for ensuring that we have both a sustainable and an equitable housing finance system. But traditional fair lending compliance is only one aspect of how we are working on this. We also have to think about what actions we can take to address the barriers in the mortgage finance system for borrowers of color. Last year, we began releasing fair lending data, including never before released data about how Fannie and Freddie's automated underwriting systems are doing in serving communities of color. While Fannie and Freddie do not make the final credit decision on whether a loan is approved, that is done by mortgage lenders. We know that their systems play a huge role in the market, and we are committed to making sure Fannie and Freddie have models that are fully compliant with fair lending laws and serve the functions of maintaining a sustainable and equitable mortgage finance system. We also know that reliance on traditional measures of creditworthiness often does not reflect modern credit usage. Last year, Fannie Mae began using rental payment data in certain circumstances in the underwriting system. A rent payment is often a consumer's biggest monthly expense, and in some cases, transitioning to a mortgage lessens a consumer's monthly housing expense. Using rental payment data for mortgage underwriting is just common sense. We see this as an area ripe for further research and opportunities. FHFA is also currently considering how to update Fannie and Freddie's use of credit scores. They have used the classic FICO score for many years. This is now many years out of date compared to modern credit scores, and there are more modern available alternatives out there. Congress passed a law requiring us to assess alternatives to that credit score, and we're currently undertaking that process. While no proposed credit score option will be a silver bullet for expanding equitable access to credit, we know that there's an opportunity here to move the market forward. We're also excited about the possibilities of special purpose credit programs. We signed on to an interagency statement recognizing that responsible use of special purpose credit programs can be a key tool to helping close the racial homeownership gap. We've been pleased to see more and more lenders adopting or thinking about special purpose credit programs, and we are working with our regulated institutions to make sure that they're doing their part to support special purpose credit programs, which, as Demetria mentioned, are compliant with both the Fair Housing Act and the Equal Credit Opportunity Act. Valuation is another key issue where we think we can make a difference and help shape a more equitable housing finance system. The media reports of appraisal bias and Black families having to whitewash their homes are extremely troubling. We conducted a survey of appraisal records and noted very troubling language used by some appraisers, referencing directly the race and ethnicity of the neighborhood in their appraisal reports. These are not appraisal reports from the 1930s. These are appraisal reports from the last few years. You can read about that on a blog post on our website. We found that very troubling, and it just highlights the need for the work of the PAVE task force. And we were proud to participate in that and are going to continue working with our interagency partners to implement some of those actions to address the issue of appraisal bias. That plan provides a comprehensive roadmap of what we can do right now to start addressing the issues of valuation disparities for communities of color. We've begun to share appraisal data with our federal partner agencies to support efforts to research this issue and to enforce fair lending and fair housing laws. And we think data sharing and transparency are key elements of a well-functioning and equitable mortgage finance system. We also worked with our federal partners to address what we saw as insufficient discrimination standards under the Uniform Standards of Professional Appraisal Practice. And we know that the Appraisal Foundation is currently considering revising the standards on that issue. There are also common sense reforms that can be made in the appraisal process to make sure that everyone gets a fair and equitable appraisal. One example was our recent announcement of making desktop appraisals a permanent feature of enterprise mortgage lending. During the pandemic, we worked with Fannie and Freddie to utilize alternative appraisal methods to minimize contact and spread of COVID-19. Turns out some of these methods have really proven themselves like desktop appraisals, and that can be an effective way to both minimize the time that it takes an appraiser to fulfill the requirement, as well as minimizing contact with the borrower, which can prevent one potential way for bias to creep into the process. We also don't just think about equity on the single family side. On the multifamily side, we're looking for opportunities to advance equity. Fannie Mae recently announced a program to support the Housing Choice Voucher Initiative, which we think is really promising. And we're always looking for more opportunities to do work in this area. We're proud of our record on advancing equity for communities of color in the housing market of FHFA, but we know our work is never done. We're working tirelessly to find opportunities to advance equity and sustainability, both with the government, with our regulated entities, and with all industry partners, as well as consumers and advocates, to make sure that we have a system that works well for everyone. Thank you very much for the opportunity to speak today. I'd now like to introduce Pam Perry, Vice President of Single Family Equitable Housing at Freddie Mac.
Thank you. Thank you, everyone, and I appreciate the privilege of being here and speaking with you today during Fair Housing Month, as James mentioned. I can vouch for the for it's not my privilege for Freddie Mac single family, and you're focused on addressing these research have that on addressing the ownership gap, financing creation,
Pam,
reservation.
I think we're having some trouble with your audio. Can you double check to see if you're only on one connection and that your mic is, the right mic is being used?
Sorry about that, guys. Is that better?
Perfect, thank you.
Okay, sorry, everyone. I was just speaking to the fact that I can vouch for the FHFA's powerful partnership with the enterprises in addressing equity. I have the privilege of leading Freddie Mac's single family equity effort to address the disparities and inequities in housing for Black and Latino families in this country. And we are really laser focused on addressing a number of the most persistent issues that stand as barriers to racial equity in this country, addressing the homeownership gap, addressing the financing and creation of and preservation of affordable housing, eliminating disparities among members of Black and Latino communities and their experiences with the housing finance system, addressing systemic underinvestment in historically redlined communities that remain underserved, and increasing opportunities for renters, as James was just referring to, related to rental payment data. How are we doing so? I'd like to get into that just briefly here this morning. We are focused on addressing barriers to loan qualification. We understand the need for the enterprises as standard setters for the industry to reevaluate issues with respect to loan qualification criteria, lack of down payment assistance, lack of rental payment data as we drill into homeownership gaps. Despite the challenges that we've identified along with our partners in the industry, many barriers remain. I wanted to mention a shout out, as James mentioned, Freddie Mac's equity efforts address both equity efforts on the single family side as well as on the multifamily side. As I like to say, the tenants in the multifamily buildings that we finance are future renters in this, future homeowners in this country. And so it's really imperative that we ensure that their on-time rental payment data is both reported to the credit repositories and consumed by our automated underwriting systems so that we can fairly provide access to credit for renters across the scale. We know that there are 3.4 million prospective homeowners who are Black and under the age of 45 and who present the credit characteristics to such that they appear mortgage ready. I'm going to pause on that for just a moment. 3.4 million Black Americans under the age of 45 have the current credit characteristics that would indicate they are mortgage ready, yet they do not currently have access. They do not currently have a mortgage. That represents a really business and moral imperative for all of us as we talk about young Black Americans and Latino Americans who in the coming years will make up the majority of first-time homebuyers in this country. So this is an issue really of critical importance to all of us. How do we serve Black and Latino borrowers of the future? And the future is now. We are certainly doing our part and really look forward to rolling out some new strategies to the industry in the coming year that we will be able to leverage in partnership with all of you. Part of our efforts, as we all know, we don't act alone. We don't touch consumers directly. We partner with all of you in doing so. So we must reach out and partner with those in the industry those we have longstanding relationships with, as well as those we have not developed deep relationships with in the past, but need to really leverage in the future. We need to expand our community outreach and our financial capability programs to reach borrowers where they are, to reach millennial borrowers where they are. We need to partner both with traditional partners, nonprofits, and communities, as well as with trusted affinity groups in communities we're seeking to serve more effectively than we have in the past. And we have plans underway and outreach efforts underway to really increase our engagement with the community. While we may expand access to credit, while we may make available special purpose credit programs, it's really going to be incumbent upon all of us to really effectively execute what I refer to as our ground game, really reach the prospective borrowers we're seeking to serve better and more effectively than we have in the past. And that is in partnership with community groups, as I mentioned, but also real estate professionals, loan officers, state and local HFAs, housing counseling organizations, faith-based groups, sororities and fraternities, and the like. Just pivoting, a number of speakers have addressed the issue of appraisal gaps. We too have dug really deep in the appraisal gap space. We are fortunate, along with FHFA, to have access to the appraisal data portal that contains appraisal information for loans originated in the conventional conforming market, repeat appraisals. We've mined that data and we've published some research and have more forthcoming on the appraisal gaps and disparities that we've identified by leveraging that data. We are working in partnership and collaboration with so many of you in the industry, and we applaud the interagency PAVE task force for its leadership and its research and its recommendations that it published to the industry recently. We too are partnering, are proud to be members of the Appraisal Diversity Initiative. Freddie Mac has partnered with the Appraisal Institute, the Urban League, and Fannie Mae to raise awareness of appraisal as a career option for minority young folks, so that we can hopefully diversify the profession as a way of addressing some of what we see revealed in the research today. And then lastly, I'll turn briefly to housing supply. One of the prior speakers mentioned it, and it really has to remain front and center in our work to address equity. Even if we can get more Black and Latino borrowers prepared for homeownership and qualified for a mortgage, there needs to be an expanded stock of affordable, good quality housing for purchase. The US suffers from such a severe housing shortage. It is estimated that at least 2.5 million additional units will be needed annually to make up for this shortfall. This fact, along with disparate access to credit, consistent devaluation of homes in Black neighborhoods, combine to constrict the ability of Black borrowers and Latino borrowers in accumulating wealth through homeownership. We are focused on creating solutions that support neighborhood revitalization, enable home preservation, and expand access to credit. We are looking at creating and preserving affordable housing inventory, and we look forward to partnering with all of you to address these barriers and hopefully guide us to a better, more equitable future in the housing system. Thank you. And with that, I will turn it back to Nikitra.
Thank you, Pam. I'm actually going to ask all of the panelists at this time to turn their monitors on, because we're going to proceed with our question and answering. James, are you with us? Great, we have everyone. So my first question is really going to talk a little bit about some of the great work that we're doing at the National Fair Housing Alliance. As you all know, NAFA is the nation's only civil rights agency that's solely focused on creating housing equity and creating equitable opportunities for everyone. And we represent more than 170 local fair housing enforcement agencies all over the nation. And we recently released a framework for auditing all algorithmic systems. We talked a lot about algorithms today as we talked about some of the appraisal issues. And our system and our framework is the purpose, process, and monitoring framework. And we believe it to be a gold standard that allows for needed critical analysis of algorithmic systems like credit and insurance scoring, automated underwriting, risk-based pricing, and digital advertising. And what the system does is it helps to identify assumptions and limitations and produce appropriate recommendations to mitigate consumer fairness and privacy risk. So how is your agency thinking about the role of algorithms in perpetuating discrimination? And then what steps are you taking to address this? And James, we'll kick it over to you first. James, you're still muted.
Sorry, is that better? Can you hear me now?
Yes.
Apologies. So thank you for that question. As I mentioned, we really want to make sure as part of our oversight of our regulated entities, since they are secondary market entities, we know that models are a big issue and one in which we can really have an impact for the market from an equity and a fair housing perspective. So first of all, we just ensure strong model governance, and that includes fair housing and fair lending. FHFA recently issued both an advisory bulletin on fair housing and fair lending compliance that made clear that we expect compliance with fair housing laws from models. It gave examples of how we apply the Fair Housing Act to the automated underwriting system models, for example. And then on those specific models, last year we started releasing some annualized data on how those models are doing and serving communities of color. And so we see transparency as a really key factor in ensuring strong regulatory oversight there. We also issued a advisory bulletin that didn't just cover fair housing and fair lending issues, but really talked about the issues associated with artificial intelligence and machine learning and some of the more advanced modeling techniques. And so, as part of that framework, we do think about fair housing and fair lending, as well as, just the risks and the benefits of those potential modeling techniques. So, really for any of those models that have an impact on consumers' lives, we know it's really important to make sure that they're compliant with the law. Another thing that's mentioned in the PAVE report is that, the federal government right now is working on a proposed rule related to automated valuation models. And the PAVE report includes sort of a commitment from all agencies to really think about non-discrimination as a strong factor in that rulemaking and that oversight framework that's going to be applied to automated valuation models. So that's something we're participating in as well. But we're certainly not waiting for any rule. The law applies to the models right now, and that's part of our obligation as regulator and conservator for Fannie Mae to make sure that those models are compliant.
Great, thank you. Demetria?
Thanks for that question, Nikitra. As folks don't know, it's very clear at HUD, particularly in the office where I am, Office of Fair Housing and Equal Opportunity, that AI can be very problematic. Now, as seen in our 2019 actually charge of discrimination against Facebook that actually came out, that really kind of showed that algorithmic systems really do play a hand in housing discrimination. And so the impact of the use of AI is something that we at HUD are examining and discussing, and we've certainly consumed NAFA's report, which is very rich. And actually, if folks don't know, we're joining other federal agencies actually at the leadership of the White House to actually look at these issues of AI equity. And so we have things that will probably become forthcoming, but we're trying to take a critical look. But at the end of the day, particularly for my office where I am, discrimination is a problem, whether it be with or without the use of AI. And so like I mentioned before, AI was implicated in that 2019 charge of discrimination against Facebook that we issued. So thank you for the question.
Thank you. Pam?
Thank you, Nikitra. I really, I guess I'll just defer to what James said from FHFA. It's certainly, we take it very seriously, the potential for models to discriminate, the potential for models to violate fair lending laws, and it is certainly longstanding part of our fair lending program at Freddie Mac that we include models as a key area of focus in our fair lending analysis, trying to ensure that we are always identifying any potential disparate impacts and searching extensively for less discriminatory alternatives where they may be available.
Great, thank you. So James, I actually have a follow-up question for you. So National Fair Housing Alliance, again, my organization, was commissioned by the appraisal subcommittee to conduct an independent analysis of the appraisal system. And we've seen today's chat have a ton of questions about appraisal. So I want to make sure we get this one in. And our report was the most comprehensive review to date and found systemic challenges within the appraisal system, and that, you know, this is not the result of a few bad apples in the system, and that systemically Black communities are paying about $156 billion annually based on the Brookings Institution study and the impact of appraisal bias. So how is FHA thinking about holding the enterprises accountable to ensure their algorithmic systems, included AVMs, are not perpetuating discrimination? And you mentioned, you know, the work that you're doing in PAVE, but is there anything in addition that you want to add?
Sure. Thank you for the question. And I guess I would just say, I think it's important, especially with AVMs, to think about it holistically, because AVMs are based on appraisals. And if we have a problem with appraisals, that's a problem we need to solve to deal with AVMs. And so, you know, in some way, you know, garbage in, garbage out, right? You know, if you want to have a model, you need to have good data going into it. So we're thinking about what can we do in our supervision of the enterprises to make sure that appraisals are strong. That's part of those issues, you know, the blog post that I mentioned. We want to make sure that there's as little discrimination as possible in the actual just appraisals that would be used for model development. And so that means making sure that the appraisal is sort of right-sized, that there's a menu of options that can potentially reduce bias while maintaining accuracy in appraisals. That means we're looking at the language on the forms of the appraisals and ways we could, you know, just kind of think about the process of the appraisal to minimize the opportunity for bias to creep into that. And then, of course, you know, we're thinking about obviously just supervisory oversight, and that's with our interagency partners. You know, there are many federal regulators that regulate institutions that use appraisals, and you know, using discriminatory appraisals should be unacceptable. And so we as a federal government need to have that standard. And so that's going to help the data be better that goes into the AVM models. You know, I mentioned that rulemaking. I think that's an opportunity for us to have sort of a whole of government policy for all AVMs to meet that standard, which is, you know, already the law in the Fair Housing Act and the Equal Credit Opportunity Act, that they be non-discriminatory. And I think, you know, as Pam mentioned, just we have a robust partnership with the enterprises to make sure that models undergo rigorous fair lending testing. So that's another element of it.
Great, thank you. Let's move on to the next question, unless Demetria, you want to chime in on anything as it relates to this one. Okay, so we know that according to the Urban Institute's analysis of Freddie's data, that there are millions of mortgage-ready Black and Latino consumers. Special purpose credit programs allow lenders to create programs to reach underserved borrowers. We've already heard that the CFPB issued an opinion stating that the use of special purpose credit programs is legally permissible under the Equal Credit Opportunity Act and Regulation B. And Demetria mentioned that HUD provided guidance that doing so complies with the Fair Housing Act. Given FHFA's acting director Thompson's guidance late last year on special purpose credit programs, Pam, how is Freddie Mac working to support liquidity for special purpose credit programs?
Thanks, Nikitra. I can barely contain myself coming off mute to talk about special purpose credit programs. Anyone who's had the opportunity to be in a room with me talking about racial equity over the last year knows how thrilled I am about the promise of special purpose credit programs, or that the promise is finally going to be realized. And so Freddie Mac is by no means an exception, but we are planning to propose, or we're planning to implement later this year, two special purpose credit programs, one for purchase transactions and another for refinance transactions. The hope is that if we build it, you will come. We are going to offer special purpose credit programs under which lenders can originate loans to Black, Latino, and Native American borrowers and communities, and under which we also will purchase loans originated under lenders' proprietary special purpose credit programs. We know that notwithstanding all of the regulatory guidance that has come forward, we still hear concerns from some lenders about the legality of special purpose credit programs. So I say to my peers in the regulatory community, keep the guidance coming, keep commenting on it, keep speaking on it, because we are building it, and we hope that the lending community will come. We know from our conversations and our partnerships with the primary market that there are a number of financial institutions in the primary market who are excited to launch special purpose credit programs or to originate under ours. And I really hope that we use this moment in time and use this tool that was so widely available to us for so long. And I'm, again, just deeply thankful for the regulatory guidance that has helped kind of clear some of the concerns about fair lending that have prevented the industry from really moving forward with the use of special purpose credit programs.
Thanks, Pam. Demetria, we often heard, after the CFPB issued its opinion, that lenders needed more certainty and clarity from HUD. And, HUD has spoken and provided the clarity that you mentioned. How can we see special purpose credit programs gain more traction in the industry now that the Federal Reserve, the OCC, the FDIC, the National Credit Union Administration, CFPB, HUD, and FHFA and DOJ issued the interagency statement to remind creditors of their ability to use them?
Nikitra, they just need to do it. Right? So there are several banks that are already offering these kind of programs in targeted ways. The regulatory agencies have spoken, HUD has spoken. They need to create scalable, viable programs. We pushed back the barrier that was believed that was the Fair Housing Act. We've already made our opinion known on that, guidance known on that, I should say. I think to the point that folks are reluctant to use these kind of tools, I think additional barriers are probably more perceived than actually real. Secretary Fudge has made it very clear that now is the time for us to see more of these. And so we, along with our sister agencies, are wanting to see more of those. Nikitra, that's what we have to say at HUD. It's time, it's time, it's time.
Thank you. James, do you want
to?
And
I'll put in the chat the guidance that we issued for folks' convenience.
Great. Thanks for that, Demetria. And I should let everyone know, I think I responded to a question earlier with NAFA's blog, because we were one of the catalysts in pushing for this, along with our partners at the Mortgage Bankers Association. Wendy said it earlier, it's going to take all of us. And that's why we're all here today, because we know that it is going to need to be a collective effort to create the kind of impact that's necessary. So James, do you want to chime in on this one, or are we ready for the next question?
I'll just say briefly, we did sign on to the interagency statement along with all of the other banking regulators, recognizing that special purpose credit programs are compliant with ECOA and the Fair Housing Act. There really shouldn't be any question about that now. And Director Thompson, also issued a supportive statement when HUD issued its guidance. So we were very supportive, and we're looking forward to the promise of special purpose credit programs and how both Fannie and Freddie and the Federal Home Loan Banks can support them as part of the secondary market.
Great, thank you. So one of the issues that people talked about in opening remarks is housing supply. Definitely a critical issue, but one of the other issues that we know continues to be a major barrier for Black families in particular is the lack of liquidity for small dollar mortgage loans. It has, an inordinate impact on Black home buyers. And we just saw recent reports talk about the reality that many families of color and other low wealth families are actually, resorting to predatory products because of their inability to really gain access to small dollar mortgage credit. And we also know that entire whole cities like Detroit and regions across the country are locked out because their housing stock, especially in a lot of cities, in the middle of the country, not necessarily on the coastal portions, but even in the coastal portions in those rural communities, there's a need for small dollar mortgages. So what steps are being taken and what additional steps are needed from regulators to increase liquidity for small dollar mortgage loans? And we'll kick off with you, Demetria.
Certainly, thank you for the question. And just to level set, the reference to small dollar loans is a reference to homes that are less expensive, essentially. Homes that are less than $80,000, generally speaking. So there are actually initiatives underway, not through the Office of Fair Housing, but through FHA and at Ginnie Mae here at HUD to create programs that actually enable more small dollar loans and remove barriers that lenders have reported to originating and refinancing these loans. We have specifically included small dollar loans in our equity action plan. And we're also exploring ways through policy changes on the administrative level and perhaps legislative packages to kind of ease the cost and improve the incentives to help more borrowers who are living in lower cost urban and rural markets so that they can access those loans. So it's actually a very specific item in our equity action plan. So we are working towards that. Thank you.
Thank you. Pam, do you want to chime in here?
Actually, I'll pass on this. I'd be interested in James' thoughts.
Thank you. James?
Sure. I think Demetria said it very well. I think, for a long time, lenders have talked about just the challenges with that kind of market and, really the kind of fixed costs with originating a mortgage. And that just becomes very challenging with those lower loan amounts. And so, we're looking at that ways that FHFA or our regulated entities could support that, because I do think it's important to have a market for small dollar mortgage loans. Ultimately, that's good for the mortgage finance system too, right? People, taking out mortgages on modest homes, not overspending, that's a good thing. And so we should be trying to support that. I think there's a tie-in here too to the appraisal bias issue. Having kind of when lenders have sort of policies or thresholds about not making small dollar loans or not serving, based on a property value threshold, that's for a long time been known to be a fair lending issue. That's not new. There are cases going back to the 90s about that. But I think just the fact that we know more and more now about appraisal bias and the issues associated with that, it really just highlights the importance of this issue.
Thank you. And Pam, you seem to be getting a number of questions because people are really excited about your enthusiasm for special purpose credit programs. So I'm going to direct a couple of the audience's questions to you. So it says, great news, follow up for Pam Perry. Will you be offering special purpose credit programs and in which communities?
So we're not prepared to make any announcements just yet, but stay tuned. It is my expectation that at some point in the third quarter of this year, we will roll out special purpose credit programs and provide more detail to the industry. So I guess that's really a non-answer, but it's a stay tuned.
That's
More
an,
to come.
that's an
And
excellent.
Nikitra, I'm excited too, just as the audience is.
Happy to hear. So Pam, we have another question for you, and I think this will just be a clarifying question for you. It's about where can people find information about special purpose credit programs on your website. So you might want to just provide some details on how people should stay tuned. Should they look out for, a press release or an email announcement? Just give people some sense of what is it that they should look for.
I will be happy to scream it from the mountaintops. I really, in all jest aside, I really am so excited about special purpose credit programs. And when we reach the point where we can announce what we're planning, I think that you will find it widely available. We will really push it out broadly to the industry for the sake of all of our stakeholders in the industry and consumers alike.
Great, thank you. So I'm going to direct just this other question broadly to each of you. So let me know if you want to answer it. And it's about the broad impacts of the sharing economy. So I'm going to try to read it and summarize it a little bit. And it says, what are you observing about the broader impacts of the sharing economy on housing affordability and accessibility, particularly home sharing and short-term rentals? Are policies being developed, implemented to address this, especially to mitigate any further exacerbation of challenges minorities face? And I typically say people of color, but I read minorities because I wanted to honor the question.
I think it's a little outside of my wheelhouse, so I'll let others speak on that.
Maybe we'll provide a written answer on that one from the Black Homeownership Collaborative, because it seems like that one doesn't have any hands raised. So let's go on to the next question. And this one is about, the rising of current interest rates. We had this experience post, well, not post, but during COVID of, efforts being taken to really shore up the economy. The Fed had invested, billions of dollars in agency mortgage-backed securities and took other efforts to keep the Fed funds rate low. And that has helped to result in low interest rates. And now we are starting to see shifts and rates and potential rising. So this question says, how realistic with the current interest rate of 5% are we going to get Black and Latino people into homes? So I'll turn that over to each of you.
So I'm happy to take that one. I think that I think it's unfortunate that many existing Black homeowners in particular did not take advantage of the refinance boom, and the rapidly rising rate environment most definitely makes it challenging for us to really fully realize the promise of the low interest rate environment as it relates to existing homeowners, many of whom have been in mortgages for a very long time that are at rates that are not deemed affordable. So that's unfortunate on the refinance side. It's not over yet. We still see some borrowers of color out there who have interest rates well above 5% in pretty large numbers, but not nearly as many as could have refinanced a few months ago. So putting the refinance aside, even in the purchase environment, obviously the rising rate environment makes the cost of homeownership in terms of P&I payments more challenging. But I will say we continue to witness many borrowers of color who pay more in rent than they would pay in principal and interest on a mortgage loan for a home, medium-priced home in their communities. So by no means has the rise in interest rates to 5% made it completely unaffordable for borrowers of color to attain the dream of home ownership. It has made it more challenging, but not impossible by any means. There are a number of resources available in the marketplace that are underutilized, such as down payment assistance programs offered through a variety of sources that are not well utilized. And we're looking at solutions to make those easier to research and access, both for individuals and for loan officers alike. There are a number of programs out that individual financial services companies have made commitments to the industry, and that is to provide funding for not just down payment assistance, but it could be for buying down rates, which is going to be even more important going forward, as well as looking for opportunities to reduce the costs in terms of the cash needed to close on a mortgage. I think that for many borrowers, I mean, cash to close is for many consumers, cash to close is the most significant barrier to home ownership. And so as we can kind of steer more borrowers toward higher LTV loan products, not just FHA loan products, but loan products available from the enterprises as well. And what we hope to see in terms of more solutions to reduce other closing costs at the table, such as title and MI and appraisal. And we are certainly at Freddie Mac working on alternatives and opportunities to reduce those closing costs to make attaining homeownership more viable for Black and Latino and Native American consumers. And I don't think that the rising rate environment eviscerates the possibility that those alternatives present to expand homeownership for minority borrowers.
Thank you for that, Pam. I do want to add on, just, with moderator's privilege here, that we have seen investors purchasing 1 out of 7 homes in communities, and disproportionately they have been in the very hardest hit communities from the subprime mortgage crisis. So many Black communities in southern states and also in Midwest states. So I think it's critically important that we continue to do all that we're doing to make sure we expand access to opportunity to get those mortgage ready consumers in, because like you mentioned earlier, we see the pressure on renters, and we want to make sure that today's renters do have the opportunity to become tomorrow's homeowners. So I think we have enough time for one broad question for each of you, and then we'll see where we land. I want to thank the audience for their great questions. So this one is specifically about redlining. So Demetria, we're going to kick this over to you as the kickoff. And the question is, what is being done to address redlining? It keeps Black families in segregated communities. And this one is center to our heart at the National Fair Housing Alliance. So we're interested in hearing your response.
Certainly. Well, I mean, redlining is certainly a legacy, right, of our country. I mentioned earlier that the president issued an executive order back in January 2021 for us to really kind of root out all of those problems that have continued and have perpetuated. So this is a really critical question. And I just want to point out to folks who may not be aware that there's a requirement under the Fair Housing Act that our communities actually affirmatively further fair housing, which means that communities, it's not enough for communities to not discriminate. They actually need to go about to make sure that their communities are actually achieving fair housing goals. A rule came out during the Obama administration to help actually actualize and implement that requirement. It was actually pushed back during the last administration, but we are bringing it back now. We have already reinstated the definitions under the rule, because there were some definitions under the prior administration that actually didn't make sense to anybody when it comes to fair housing, to be honest with you. And so we're in the midst of actually redoing that rule and revising that rule. What does that mean for the audience? Okay, what that means is we're going to re-implement a certain planning process that our communities need to go through by law, that they have to go through, to the extent that those communities actually receive our HUD funding. And that means that they've got to actively look at the data, including where people live, geographic information, things like that, and we'll provide technical assistance to help them do that. But they've got to listen to the community. They've got to open up to the community, bring the community in and hear the experiences of lived people, lived experiences, to hear what are they saying the fair housing problems are, right? Because redlining may be happening in community A, but not community B. So the folks in community A where they have redlining need to speak up and tell the people who run their local or state government about what those problems are. And it is incumbent under the law that those communities actually have to take steps to try to fix this particular problem, be it a new problem that just existed or one that is a legacy problem from back when the federal government allowed these redlining maps to take place. And so we're hoping that the revision to the rule is out for comment to the public, hopefully in the coming months. And then we'll have our communities actually engage with us. We'll provide technical assistance so that they can actually do right? And this is a requirement that actually existed back to 1968 under the Fair Housing Act. And so we've got to get a handle of this situation. We can't go on. If you look at maps now and data now about communities, some of the communities that experience the most harmful things right now, be it, the impacts on the environment and things of that nature, they're the same communities, and those maps perfectly match up to those redlining maps of the 1937. So it's front and center on our mind right now, and I appreciate the question. Thank you, Nikitra.
Absolutely. And I just want to alert the audience before I turn it over to James and Pam to chime in here. We actually have more time for your questions. This is the portion where we're supposed to be taking Q&A from the audience. I started to incorporate that in our discussion already, and we'll continue to do that from this point forward. So James or Pam, do you want to chime in on the redlining question?
Sure.
Well,
Go ahead, Pam.
Well, I was excited about Demetria's mention of climate equity. That's a topic near and dear to my heart. We've been charged with addressing not just racial inequity in the housing finance system, but also underinvestment in formerly redlined communities that remain underserved. And in other words, formerly redlined communities that have not gentrified. And many of those communities are, as Demetria mentioned, they are on the worst land, separated by concrete jungles and freeways from more viable land with greater green space to absorb water. These communities are at greater risk of flood damage and the vestiges of a warming planet. The members of those communities are those least able to weather the impact of a storm in terms of least able to purchase flood insurance that isn't otherwise required. The flood maps don't actually coincide with the reality of the climate in 2022. And I'm both encouraged by the SEC's rule that public companies need to climate rate every item on their financials. But I'm also somewhat concerned about what that looks like for communities of color, where in fact, home ownership or the value of property may be more susceptible to a warming climate. And I'm concerned about what that may do to further drive inequities. And so I think that that's a challenge for all of us to keep our eyes on. So that was what really jumped out at me about what Demetria mentioned. And I don't often hear climate equity discussed in the same sentence with racial equity in homeownership, and I think it really needs to be. The time is now. We can't afford to wait to address these issues that, yet again, borrowers of color will be negatively impacted more so than their white counterparts. I like to say it's not enough of a legacy from this type of role in this period, this moment in time where we're trying to tackle homeownership disparities. It's not enough to put more Black and Latino families into homes if we're putting them into homes on land that should never have been built upon in the future. And so this really is a deep challenge for all of us as we address expanding homeownership to Black and Latino families.
Thank
With that,
you.
I'll pass it to you, James.
Thank you for that point. Before we pass it over to James, I'm actually going to come in with a little bit of moderator's privilege here. We've seen articles, and I'm really excited that you went into the details here on climate issues and environmental injustice, both of you, Demetria and Pam. We've seen articles recently in the Washington Post and the New York Times highlighting the ongoing environmental impacts of redlining, right? Like, we know that redlining made Black and brown communities deadlier for the residents who lived there. And, at NAPA, we've often talked about where you live matters, right? We know that many communities lack potable water, that, education systems are funded inequitably because of the result of redlining. We have more toxic air. So I think this is such a critical point. And I think one of the things that we have to make sure is done during this time, as you mentioned, Pam, is that we're thinking about the ongoing environmental challenges as we talk about climate, because I think you're absolutely right that we've got to talk about, climate as part of access to affordable homeownership opportunities, but we also have to pull in the reality that there have been existing environmental impacts, and they have to be centered together in those climate-driven solutions that you talked about. So thank you for making that excellent point. James, over to you.
So I guess I would just pick up on the theme and say that, all of these issues are interrelated. Redlining is related to property valuation, is related to discrimination, is related to climate justice. They're just all interrelated. And, Pam mentioned the challenge we've issued to the enterprises as part of the Equitable Housing Finance Plan program. And one of those is, what can you do to serve formerly redlined areas? I think it's important to note that the enterprises have a Charter Act obligation to promote mortgage credit throughout the nation, is the language in the Charter Act, and it specifically mentions urban, rural, and suburban neighborhoods. The enterprises are government-sponsored enterprises. They're not just supposed to serve a narrow market. And some markets are more challenging to serve than others, but just because something is challenging doesn't mean we shouldn't do it. And I think something that Director Thompson has said in many of her remarks is, when we think about equity, equality means that sort of everybody gets the same thing. But when we think about equity, we think about everyone getting what they need. And sometimes you need to think about different programs to serve different needs and having a bunch of available alternatives. And so I think that's one way to think about it, and how we're focused on equity at FHFA. And, we really see all of these issues as intertwined. And so, as you work on one issue, you're in some ways helping some of those other issues.
Thank you for that. And I think going to your point about, the acting director's statement about equity, I think oftentimes we don't own the reality that the federal government perpetuated segregation and the inequities that we are struggling to correct for today. And that's really hard to talk about, right? Like, it's not easy. At NAPA, we talk about, centuries of laws have been put in place to create advantages for white Americans that have intentionally disadvantaged Black, Latino, Asian American, Pacific Islander, and Native communities. And, whenever we're talking about solutions, we're rooting them in the reality that these borrowers are actually, the borrowers of the future right now. The future housing finance system depends on Black and other borrowers of color having fair access, because without them, we won't have a healthy housing market overall. So I'm going to use that to kind of transition to this question around trust for all of you from.
But Nikitra, can I just say just this one thing, if folks can want to follow the Justice 40 initiative that the administration currently has. Several things as it relates to climate fall under that, but environmental justice is a piece of that. So I just wanted to point that out. So Go ahead, I'll let you transition.
That's all right. Thank you for that. It's an important point. With trust being something that blossoms over time, one act or even several good acts may not repair historical stains, especially among marginalized groups. Could each of you speak more about what you all do and how you work with partners to stay encouraged and to maintain morale when recreating and redefining relationships? And maybe Pam, we'll let you lead us here if that's all right.
Interesting. I was just speaking with one of my colleagues prior to getting on this call this morning, and my team here at Freddie Mac, we refer to it as the Valley of Despair. How do you do this type of work and keep yourself from wallowing in the Valley of Despair? We didn't get here overnight. You know, this is 400 years in the making, and we're not going to dig our way out of the current situation. The current level of inequity overnight. But I lift myself out of the Valley of Despair on a semi-regular basis when it feels like progress isn't going as quickly as I would like. And I think that part of the challenge, and this ties back to what you were saying a moment ago, Nikitra, people don't all know or accept our history as a nation. And I think it is so, so important to keep that narrative alive, that where we are today was the creation, is the result of federal housing policy. And if we are to make forward progress, we need to acknowledge that, stare that in the face, and realize that if the federal government could advance monies and create housing policy that, in partnership with the private sector, that excluded Black families, then they equally can lean in and do more to help Black families in 2022. It is not enough to have a quote unquote level playing field. We need to do more. We had 400 years of affirmative action for white people. We need to do more if we're going to close the homeownership and wealth gaps that we have in this country today. So with that, I'll pass to others.
Thanks, Pam. Demetria or James?
I've gotten so caught up. Can you repeat the question, Nikitra?
Sure, let me go back and find it. It was about establishing trust and how like not one single act will establish trust in communities.
That's absolutely right. That's absolutely, I mean, I referenced earlier the executive order that the president issued in January when he first took office. But what he also did a week later, actually less than a week later, was wrote a memo specifically to the Secretary of HUD, who actually was unnamed at the time. And I put it in the chat. To establish trust requires watching what people do, not just what they say, right? And so the president on January 26th actually issued the memorandum to HUD. The memorandum on redressing our nation's and the federal government's history of discriminatory housing practices and policies, which really is a directive to HUD to actually deal with and address things like the audience member mentioned regarding redlining. And so it's about doing. I don't think you get to trust just by people telling you things. It's about doing things. So I would just tell the audience, watch what we do.
Thank you. James?
Yeah, I think active listening is really important. One of the things we've done at FHFA is we really do a lot of requests for input. We do a lot of virtual listening sessions. Part of our charge to the enterprises under the Equitable Housing Finance Program was, not just to kind of talk to people in the industry, but talk to people who live with the experience of, living in a redlined community, understand the needs. I think it's so important. So I think listening first is really important. I do want to pick up on a theme that Pam mentioned of just sort of acknowledging the history and acknowledging the problem. I think that's also really important. I think sometimes, you know, in the government or in the industry, we can get defensive. And I think it's really important not to do that. I think we have to just acknowledge the problem, acknowledge the real pain that that has caused for communities of color. That's real. And, you know, specifically about, you know, the fact that President Biden went to Tulsa to sort of announce the PAVE initiative. You know, I'm from the Tulsa area, so that was very meaningful to me. And I will say, you know, in school, we were taught that that was the Tulsa race riot, what happened, and that was not true. And so how you frame history is just really important. And I think it's important to look at it, to really acknowledge what has happened, and then think about how we find solutions, to listen actively to members of the community. And then, you know, Pam was kind of talking about the valley of despair. You know, I think when you work in fair lending, you know, you can think about like, well, what is my batting average in terms of winning? But, you know, any win is a win, right? You know, it's like, you're not going to win every issue. And so just the fact that people are organizing, the fact that people are talking about this issue, the fact that people are promoting solutions, you know, every single one of those solutions is a victory that people should take pride in, and that we should celebrate.
Thank you for that, James. I think we have to make sure we create meaningful change. People are desperate for change. I think when Demetria spoke about us doing, that's so critical, because, you know, our communities have been hardest hit. You know, we're experiencing the second crisis, the second pandemic. The first one wiped us out, quite frankly. We didn't get enough solutions then. The policymakers at the time did not, quite frankly, often work with key civil rights organizations and take our recommendations. We got some victories like the Consumer Financial Protection Bureau, but oftentimes with legislative efforts, we never correct for. And I think during this COVID-19, you know, ongoing health pandemic, we see how housing inequity is so central to the health pandemic, and it's made it more deadlier for people in our community. So I think the point about doing is so critical in this instance. Moving on to the next question, and we only have about 7 minutes, so I'm going to probably do one question per panelist at this moment to just try to give you all an equitable opportunity to continue to respond to these great questions that are coming in. I'll direct this one to you, James. This one is about monitoring loans and purchases of the enterprises, and it's, you know, what is FHA, and I'm paraphrasing a little bit, doing to monitor the loans that the GSEs purchase to determine if Black mortgages are concentrated in formerly or currently redlined communities?
Thank you for that question. So there are a few things we're doing. One, you know, we've started releasing fair lending data, both about enterprise purchases, but also about the automated underwriting systems on our fair lending data webpage. And so that's a commitment that we're going to keep up annually. You can also find information about enterprise purchases and how they are serving communities of color in the annual housing activities report that's issued every year. And one of the things we did recently was, as part of the new affordable housing goals regulation, was established a specific sub-goal for minority neighborhoods. And so that is something we're doing to ensure that those affordable housing goals are not just are serving minority communities and serving communities of color. So that's some of the things we're doing to ensure enterprise purchases to communities of color.
Thank you. I'm going to direct this next question to you, Demetria, and this one is about investor purchases. So what policies or initiatives could HUD put forth to increase competitiveness of owner-occupant buyers vis-a-vis corporate investors in the home purchase market? It is increasingly difficult for many home buyers to compete against all cash offers. And naturally, James, you know, if you want like 30 seconds, you can hop in on this one.
And actually, probably James is probably better suited for this particular question. Again, my office focuses on actually discrimination, but I do know, I will say this, that over on the other side of the hall, you might say, in our FHA, they are actually have been really kind of focused and leaning in on the idea that they like to have nonprofits, right, purchase homes above for-profit purchase homes that they have. And I think with that will become the domino effect that low and moderate income families who want to purchase homes will have a better opportunity to buy homes that are actually affordable to them. So I will say that, but I do think I'm looking forward to hearing what James might say on this space.
Sure, just really quickly, I think in the REO space and the kind of post foreclosure space, FHFA has a first look program as part of that, where there's sort of a protected period for those REO properties to go to owner occupants and sort of community nonprofits. We've really taken a look and really tried to improve that REO pipeline. Thankfully, right now, REO supply is pretty low. But we know, in times of crisis, it's important to have that already built up. I think just looking at what we can do to make sure that bread and butter financing products, conventional loans are available and that people can use that as a competitive way to get into a home to compete with those all cash offers and compete with investors. I think that's also something we can do.
Great. So I think that leaves us with maybe enough time for one round robin final question that I'll ask each of you. And this one is a question about housing as a fundamental human right. I'll just give you that reference, give you a minute to think. A lot of the issues in housing are baked into the fact that housing is an industry where equity is overshadowed by what is deemed economically efficient. How long do you all imagine it will take to shift this mentality and for housing to truly be regarded as a human right?
Well, I can just tell you, oh, go ahead, Jen.
No, go ahead.
Pam, why don't you lead us?
Okay, thanks. That's the type of question that sends me into the valley of despair, because the answer is not being a realist. I don't know that we're going to get there within our professional lifetimes, and possibly within our time here on Earth, traveling around the sun. But I'm going to keep pushing forward. I think that housing is a human right. I don't believe that. I think quality housing is a human right. I don't necessarily view home ownership as a human right. Not all individuals aspire to the dream of home ownership. Not all individuals have the desire coupled with economic stability to be successful homeowners. But what I do know is that there are tens of millions of individuals who desire homeownership and do have economic stability to attain homeownership if they so desire. I think the promise of mixed use communities, mixed income communities is really encouraging to me. I live in one of those types of communities here in the Washington metro area, and there is equal pride among the renters, some of whom live in subsidized rental housing, as there is among single family homeowners, and the intermingling of our children in our community and in the schools that serve our community. So that is the type of perfect example of a combination of coupling affordable rental housing, building it not just in formerly redlined areas, but building it in an economic opportunity zone, not creating ghettos, but providing an opportunity for people of varying income levels to live in a shared community in which they take pride and invest in that community.
Thank you for that, Pam. I'm going to give Demetria and James just 15 seconds because we are at our capacity. I want to give them 15 seconds to see if they want to share one final thought.
Go right ahead, teacher. That's fine. We're at time. I understand.
Great. Well, thank all of you for joining. I think this was a very engaging discussion. We really appreciate that it's going to take a collective effort. And with that said, we will turn it over now to David Dworkin.
Wow. Wow, what a panel. What a discussion. Thank you, all of you. My expectations were high. You completely exceeded them. And I guess I should not be surprised. So the only thing I would say is, please do not spend too much time in the valley of despair, because our nation desperately needs your vision and all of our work. So that was just a phenomenal panel. Now I am very pleased and honored to introduce Acting Comptroller of the Currency, Michael Hsu. Acting Comptroller Hsu supervises many of the largest banks in the world, helping to ensure that the federal banking system operates in a safe and sound manner, provides fair access to financial services, treats customers fairly, and complies with applicable laws and regulations. And those are not mutually exclusive. They actually work very well together when they're done right. Prior to joining the OCC, Mr. Hsu served as an associate director in the Division of Supervision and Regulation at the Federal Reserve Board of Governors. In that role, he chaired the Large Institution Supervision Coordinating Committee, which is responsibility for supervising the global, systemically important banking companies operating in the United States. He also co-chaired the Federal Reserve Systemic Risk Integration Forum, served as a member of the Basel Committee Risk and Vulnerabilities Group, and co-sponsored forums promoting interagency coordination with foreign and domestic financial regulatory agencies. Acting Comptroller Hsu has brought much needed balanced approach to the OCC. Under his leadership, he has urged scrutiny of cryptocurrency, begun setting the groundwork for climate-focused oversight, and helped reset interagency negotiations on reforming the Community Reinvestment Act. Acting Comptroller Hsu's decision to rescind the controversial 2020 CRA rule was widely appreciated. We look forward to seeing a new unified notice of proposed rulemaking very soon, and maybe we'll hear more about that now. Welcome, Acting Comptroller Hsu, and thank you for joining us, and thank you for all of your important work.
David, thank you so much for that very warm welcome. And I'm sure I've got a couple remarks here, and then we got some Q&A, so I'm sure we can get into the CRA question that you just posed. So let me just jump right in. So good afternoon. Thank you for inviting me to join you for this Black Homeownership Collaborative Fair Housing Month Forum. I want to start by commending you for collaborating as housing and civil rights leaders to develop a plan to increase Black homeownership by 3 million net new Black homeowners by 2030. And let me just say as an aside, I am extremely supportive of having such a concrete outcomes-based goal. Your 7-point plan for achieving this goal aligns well with efforts by the Biden administration and the OCC to promote financial inclusion, expand access to homeownership for minorities and historically marginalized communities, help close the racial wealth gap. First, let's consider why these initiatives are even needed. Economic inequality in the US has been rising steadily over the past decades. The income gap between upper and lower income households has nearly doubled since 1970. Studies show that the wealth gap between Black and white Americans is roughly the same as it was more than half a century ago before the passage of the Civil Rights Act of 1964. In 2016, as it was in 1962, average wealth for white families in the US was nearly 7 times greater than that of Black families. As many studies have confirmed, homeownership is an important determinant of generational wealth, and persistent racial wealth inequality is a significant barrier to economic advancement for families of color, their communities, and future generations. Your 7-point plan notes that the Black homeownership rate has plummeted to levels not seen since housing segregation was legal. According to the report, recently released by the Interagency Task Force on Property Appraisal and Valuation Equity, otherwise known as the PAVE Task Force, in 2021, the Black home ownership rate was just 44%, while the white home ownership rate was 74%. As concerning, Black applicants continue to be more often denied mortgage loans than white applicants. Another recent study found that in 2020, the mortgage denial rate was 84% higher for Blacks than the white counterparts, a 10-point increase since 2019. Overall, the study found nearly 20% of Blacks applying for mortgages in 2020 were denied, the highest denial rate for any racial or ethnic group. In contrast, just 10.7% of white applicants were denied a mortgage loan in 2020. Compounding these problems, homes in majority Black neighborhoods are valued at roughly half the price of comparable homes in neighborhoods with no Black residents. Indeed, one study asserts that adjusting for structural and neighborhood characteristics shrinks the so-called penalty for housing value in Black neighborhoods somewhat. Another study found that these factors cannot explain the approximately $48,000 gap in average home value between Black and white neighborhoods in the study. Against this backdrop, I would like to talk about 3 interrelated initiatives that complement your 7-point plan to address these challenges. First is the PAVE plan to reduce appraisal bias. Last year, President Biden created the federal PAVE task force. The president charged the task force with developing a plan that advances property appraisal and valuation equity to help close the racial wealth gap by addressing misvaluations for families and communities of color. Led by HUD, Secretary Marsha Fudge, and Director of the White House Domestic Policy Council, Ambassador Susan Rice, the PAVE task force worked quickly to evaluate the problem and develop a whole of government plan. The OCC has been an active member of the PAVE task force since its inception. Last month, PAVE issued its report and announced numerous concrete action items to be taken by more than a dozen federal agencies to combat the appraisal bias problem that has long plagued the home mortgage origination process. In the report, the PAVE task force cited research that found 12.5% of appraisals for home purchases in majority Black neighborhoods and 15.4% in majority Latino neighborhoods resulted in a value below the contract price, or what a buyer was willing to pay, compared to only 7.4% of appraisals in predominantly white neighborhoods. The PAVE report identified policy initiatives designed to make a significant difference in ensuring fair and accurate home valuations for all communities. The OCC is strongly committed to carrying out the PAVE report's actions to help ensure greater federal oversight and effective monitoring for discrimination in appraisals and technology-based valuations of residential property. While the PAVE review was underway, the OCC immediately began taking steps to enhance our supervisory methods for identifying potential discrimination in property valuations, ensure that customers know their rights regarding appraisals, and support research that may lead to new ways to address the undervaluation of housing in communities of color caused by decades of discrimination. Second, let me talk about OCC's Project Reach. Another important initiative is the OCC's Project Reach, which was launched in July 2020 amid the widespread civil protest and calls for racial equity. REACH stands for the Roundtable for Economic Access and Change. Project REACH's mission is to promote greater access to capital and credit for minority and underserved populations. In Project REACH, the OCC, like the Black Homeownership Collaborative, recognizes that there is power in bringing a range of stakeholders together to collaborate and solve problems. We have used our convening power to bring together leaders from civil rights and community organizations, banks, technology firms, and other industries to address the policy and structural challenges that limit full and fair participation by low-income, minority, and underserved communities in our nation's economy. Project REACH's work is divided into 4 work streams: affordable homeownership, inclusion for credit invisibles, revitalization of minority depository institutions, or MDIs, and access to capital for small and minority-owned businesses. Let me focus on 2. Expanding minority home ownership. The affordable homeownership workstream is focused on sustainably growing minority household wealth through expanded homeownership opportunities. Workstream members are exploring ways to expand down payment assistance programs, create special purpose credit programs, employ alternative data credit scoring methods, and enhance mortgage home buying counseling services for denied mortgage applicants. I'll note that many of these overlap with the 7-point plan. The members of the Project Reach Affordable Homeownership Workstream are particularly interested in identifying and promoting local programs that may be replicated in other communities or even rolled out nationwide. Take, for instance, the San Diego Black Homebuyers Program, which uses grant funds, down payment assistance, and homebuyer counseling to help minority residents become homeowners. The program is a partnership of the Local Initiative Support Corporation and the Urban League of San Diego County. US Bank is serving as the program's main lender. The San Diego Foundation provided $1 million for down payment assistance for home buyers. To participate, private lenders must provide an additional $9,000 in down payment assistance to each home buyer who receives grant funds. The Affordable Homeownership Workstream members are currently exploring the possibility of expanding this program to other communities. Special Purpose Credit Programs, SPCPs, are another vehicle by which community organizations and banks can work together to help address home ownership and wealth gaps. In December, to promote the use of SPCPs, it's a mouthful there, the OCC joined other agencies in recognizing the HUD recently issued Fair Housing Act guidance on SPCPs. I also issued a statement encouraging national banks and federal savings associations to explore SPCP opportunities as a way to open the door to home ownership for those who have been historically shut out. For their part, Project Reach participant banks are exploring SPCPs as an option to offer special terms on rates, down payments, and closing costs to minority home buyers and those living in minority communities who otherwise would not be eligible for credit on favorable terms under those bank standards policies. Second, expanding affordable credit to credit invisibles. Another Project Reach workstream, alternative credit assessment, is exploring ways to expand mainstream credit opportunities to the millions of Americans who do not have a traditional credit score. This problem disproportionately affects Blacks and Hispanic consumers, according to the CFPB. This workstream has brought together banks, fintechs, and the credit bureaus to identify financial data not traditionally found in a credit report. This data can be used by banks and other traditional lenders to expand access to responsible and affordable credit. Workstream participants also plan to pilot an alternative credit assessment utility that integrates deposit account data and checking accounts and other alternative consumer data with an understandable relationship to creditworthiness. One alternative data option being explored is the possible identification and use of cash flow data, such as timely and regular payments for rent, utilities, or cell phone bills. For example, Fannie Mae, a Project Reach participant, now enables single-family lenders to consider rental payment history in their mortgage underwriting analysis. Moreover, the use of this type of non-traditional, more holistic data isn't limited to expanding the opportunities for homeownership. Some of the nation's largest banks are launching pilot programs using this alternative credit assessment credit utility to issue credit cards or other small dollar products to people without a traditional credit file. Finally, let me talk about the joint CRA NPR. Last but certainly not least, the federal banking agencies are modernizing and strengthening the Community Reinvestment Act regulations to expand financial access and inclusion to low and moderate income communities. Banks have made substantial investments of CRA dollars in LMI communities over the past 4 decades. Nonetheless, significant disparities continue to exist in many LMI areas, particularly for Black, Hispanic, and Native American communities. I expect there will be an interagency CRA notice of proposed rulemaking soon. This joint proposal is designed to update and strengthen our implementing regulations for the CRA, which was enacted in 1977 to better reflect how today's banking system operates. The NPR's provisions would allow regulators to evaluate more comprehensively the CRA performance of banks that offer mortgage loans outside traditional branch-based assessment areas. This change acknowledges just how dramatically the banking industry has changed. Banks and other lenders now deliver their services on our phones and laptops, rather than only by tellers and loan officers in brick and mortar branches. This is important because studies have shown that banks do a better job of lending to LMI individuals in areas within their traditional CRA assessment areas than they do outside these assessment areas. This and other NPR provisions would give regulators new tools intended to update how we examine bank CRA performance and encourage greater volumes of CRA dollars reaching LMI individuals and communities that have too often been overlooked in the past. In conclusion, these three initiatives that I've discussed are part of significant and substantial work by the federal government, including the OCC, to make real change by expanding fair access and home ownership opportunities for minorities and LMI areas. Working together with efforts like your Black Homeownership Collaborative's 7-point plan to increase Black homeownership, we can help historically marginalized communities and ultimately help to close the racial wealth gap. Now, I'm happy to take your questions.
Well, thank you, Comptroller Sue. I'm Brian Green. I'm with the National Association of Realtors. I oversee our policy advocacy. And let me just say, NAR, we're a member of the Black Homeownership Collaborative, and very excited about a lot of the information that you just shared. In particular, you talked about REACH, and I noticed, by the way, in the acronym, the H doesn't stand for anything in particular, but I would say the H stands for home ownership, and certainly advances home ownership. So it is the tip of the spear there. And there's a lot of synergy between what the OCC is doing with REACH and the Black Homeownership Collaborative. What could you tell us about how, what can you suggest in terms of how organizations in the Black Homeownership Collaborative can collaborate with OCC or do other work to get involved in this initiative?
So Brian, thanks so much for the question. So the first thing folks can do is, if you go to the OCC.gov website and just search for REACH, we've got some materials there. And that really lays out kind of both the background, and you'll see there's a list of membership, participating members there. And hopefully at least some of those members are local, are known to your members and to your network, and you can reach out to them. That's one way. The other way is to reach out directly to us through that website. But let me just say a quick little thing on REACH, which I think is unique insofar as government's concerned, because I hadn't seen this anywhere else. It really, usually we approach these issues in kind of a negotiation format. We're on different sides of the table, government to banks, consumers to businesses, and here everyone's on the same side of the table. We brought everyone together, and the challenge was, what are the problems and solutions to financial inclusion? And we, the OCC, did not provide those. That was really discussed amongst the participants, trying to identify that. So homeownership clearly was, as you said, when you could be the H. I mean, really, that is one of the four main work streams. And within that, the participants really came together and said, we really need to work on housing supply. We really need to work on down payment assistance. We really need to work on counseling. So I think it's very similar to, like you said, there's a lot of synergies there. There is a bit of different pilot projects going on. It's very exciting. So highly encourage folks who are interested, check out the website, check out those materials, and reach out to us if you have any questions.
Great, we will. So you mentioned the notice on proposed rulemaking with respect to modernizing the Community Reinvestment Act, and David mentioned that earlier as well. All of us in the housing community are eagerly awaiting that. And while I expect you're not going to break any news here in this forum, can you tell us how the CRA can be used to expand access to credit, particularly for communities of color?
Yes. So when I like to step back and both from myself and for the agency, just remind myself of what are we trying to achieve here? CRA was passed in 1977. It was to address redlining. And I think that's very important to remind ourselves of that history. That's the spirit. That's what we're trying to achieve here. Of course, the banking system looks different today. So we do have to modernize. And as I referred to in my remarks, banking looks different. So we do have to think differently about assessment areas and some of the mechanics by which we implement the CRA. But for me, to me, if I had to boil down, what are the three main objectives that we're trying to achieve with this refresh on the CRA? More, better, faster. And what do I mean by that? There need to be more CRA dollars put into LMI communities, period, and stop. So the aggregate amount of CRA activity has to go up. And I think that we just look at the outcomes. CRA has accomplished a lot, but there's a lot more to do. And that first more is in recognition of that. Second is better. The CRA dollars and the activities need to be better calibrated to each community. Each community's needs are different. And so it's not a one-size-fits-all solution. And we want to make sure that we achieve that through the regulation. And then third is faster. The more certainty there is about what qualifies, the faster those loans can be made. And that benefits both communities and the bankers who want to fulfill their CRA obligations. So the way we're modernizing and kind of updating and strengthening the CRA is done with those things in mind. As you and your members know, it's complicated. It's a complicated rule. There's a lot of different pieces to it. If you look to the Federal Reserve's advance notice for proposed rulemaking, the ANPR put out a bit ago, this joint NPR will largely track with the framework laid out there with a lot more detail provided there. So hopefully that provides some comfort that we're taking this really seriously. The agencies, we've been working well together, and we're going to put out something soon, hopefully very soon.
Great. Well, our collaborative, we called ourselves the Black Homeownership Collaborative, really to sort of drill down and dramatize the gap, the racial homeownership gap, especially for African Americans. And CRA, as you note, deals with low, moderate income borrowers, which in our thinking and the work we're doing, we felt was sort of a blunt instrument for targeting communities of color. So we've chosen to be rather explicit about it. Is there anything further you can say in the context of modernizing CRA on how regulators are thinking about taking race into account?
Yeah. So this is something we've been studying pretty carefully, because as you point out, it's really, really important, both historically and current, that we understand and we have some tools and strategies for addressing it. There have been, I believe there was a question in the Fed's ANPR about exactly this point. And so there's been a lot of review of the comments and responses to that question to see how we can integrate that into the NPR. So I can't get in front of the NPR. But what I can say is I think a lot depends on awareness, and not just general awareness of, is there a problem? I think we all know there's a problem, but really more awareness and precision about how much of a problem, where, so that we can do about it. I think that's a really important, I think there's important acknowledgement that that kind of sunshine on and transparency about the issue can be really, really helpful. It's kind of a foundation to knowing what to do, where to do, how much to do. And that's something that hopefully kind of comes through in the NPR.
Great. Well, certainly one tool that you mentioned, this special purpose credit programs allows for some targeting of communities of color. What do you see as their impact in the marketplace, and what do you think is needed to encourage more lenders to see these products as a viable option for serving communities of color?
So I think special purpose credit programs have enormous potential. And right now it's largely untapped. And it's enormous potential because the mechanics of it are built for efficiency. They're built to pool a lot of things together so that you can kind of get over this hump of having to do a lot of kind of high touch individual things. There's a kind of an economies of scale that's built into how that program is designed. And I think the biggest barrier right now is just doing them. I think that banks and communities need to just get out there and get a couple of them under their belts, and that will show the way. Because I think it's a relatively new thing, and so I think there's a little bit of hesitation around some of the legal aspects, some of the financial terms, and it's one of those, like, let's just we got to get out there. Someone's got to go first. We really got to promote that. And that's why at the agency level, we've been really focused on providing all the cover that's needed to say, go, 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 right? We're trying to encourage as much as we can, vocally, loudly, this is here for this purpose. And so what we really want to do, I think Project Reach is a great, just looping back to that, on the small business side of things. I know in Los Angeles, they're working really hard to figure out, they stand up an SPCP that's got a small business small business focus there. So, you got to get into the details. But my hope is that once we get a couple more of these under our belts, and both banks and groups have models to look to, that unleashes a bit more activity in that space.
Well, thank you. I want to say it's a breath of fresh air to hear you speak so clearly and strong on these issues. We certainly appreciate it at the Black Homeownership Collaborative. And you've got a great team there. I've had the pleasure of working with many of your team over the years, and it's just great to see everyone rowing in this direction right now. So I want to thank you, Comptroller Sue, for being with us today. I'm sure the group really appreciated everything you've had to say, and we look forward to that notice of proposed rulemaking. So thank you.
Me too. Thank you so much.
All right. Well, I'm going to turn it back to David to wrap us up.
Thank you, Brian. And I just want to, and thank you, Comptroller Sue. This was great. We're really looking forward to providing you a lot of very detailed feedback on what we anticipate is going to be an incredibly useful notice of proposed rulemaking. And I think working together, we're going to make a lot of progress. This is really going to be a true modernization. And I also want to thank the incredible staff who worked on this, Erica Ramirez and Brittany and Webb and Luke Villalobos and Allegra Tasaki and everybody who contributed. Really single out Brian and Nikitra. You guys were amazing, and both just literally could not have done this without you. And I want to recognize the incredible steering committee of the Black Homeownership Collaborative. This group has worked together. We meet every month, every quarter. We have a quarterly business review with our committee co-chairs to review what we've been doing and where we're going. Mortgage Bankers Association, the NAACP, the National Association of Realtors, the National Association of Real Estate Brokers, the National Fair Housing Alliance, the National Urban League, ourselves, and the incredible research that we've received from the Urban Institute that has helped us develop this audacious goal, but realistic if we make these real concrete proposals come true, and push ahead on marketing to just so many Black consumers who would benefit from and are ready for or can get ready for quickly home ownership, take advantage of what so many of the rest of us have been blessed with and have been given by our government. So thank you all for joining us, and we look forward to seeing you soon, and certainly reporting some exciting news at our event in Atlanta, Georgia on June 20th, the second federal Juneteenth holiday.